All right, here we are with continuing on with the accounting cycle. So we already analyzed business transactions. We already did the journal entries, and then we posted those entries to the ledger, and we prepared from there an unadjusted trial allowance. So all the blue items are what we did, the top row. And now we're going to do the second row, which is we're going to create a worksheet. And from that worksheet, we're going to plug in our adjusting entries, and then we're going to prepare our adjusted trial balance within that worksheet. And within that worksheet also, we'll piece out our income statement and balance sheet, which we could create our financial statements, but that ends up being a later step in this college accounting textbook. So the orange boxes is what we're going to do in this video together. So let's move up here just to go over a helpful tip. And so a helpful tip here for as we do these adjusting entries together is that they'll almost always involve one balance sheet account and one income statement account. And as we work through 4 common examples, we will see that one balance sheet and one income statement account are used for the adjusting entries. So to keep it simple, we're just going to do 4 common ones. We're going to adjust office supplies, prepaid insurance, record some depreciation. It's already calculated for us. We don't have to calculate it. And then also record salaries expense. So let's get to it. So here is our worksheet. We already have our unadjusted trial balance here. We see we balance with $66,000 on the debit and the credit side. Cool, we're happy. We can move on to the next phase. And the next phase is recording our adjusting entries. So here are our adjusting entries for us. We have A, B, C, and D to do. And the first one, A, says depreciation expense for supply equipment, which is $5,000. So we didn't have to calculate depreciation. In some other in financial accounting, you'll have to calculate the depreciation expense, but in college accounting, it's where we'll have either a straight line that we get to calculate, or it's going to be given to us. And so in this case, it's given to us. So the amount of our depreciation for that SPY equipment is $5,000, and so that's going to be what we need to do an adjusting entry for. So we can see here, looking at the trial balance already, there already is accumulated depreciation account. That is, as a reminder, a contra asset account. So when I say contra, I want you to think of opposite. So it's the opposite balance of what an asset account would be. So an asset account would be a debit balance. And so with accumulated depreciation being a contra asset, it would have a credit balance, and we can see it has a credit balance of $1,000. So that's correct for that account. So it'll be listed right below SPY equipment, and we can see that's the case there. So SPY equipment was $7,000, and already $1,000 was depreciated. So sitting there in accumulated depreciation, which is going to keep accumulating with all the depreciation that we have throughout, we can see that already $1,000 was used up of that $7,000. Okay, so instead of decreasing the asset account SPY equipment, instead we're going to keep track of the use through this contra asset account. So we have an additional $5,000 we need to record that we used up. And so we're going to record that expense, that use. And so we're going to go ahead and record our expense. And we don't have depreciation expense here, so we'll make a new spot for it down here. And expense is normal balance is debit. So we're going to record a debit for $5,000. And we're not done. That's our income statement account. Oh, we can see that there's one income statement account. We need one balance sheet account. Well, I just told you about accumulated depreciation being a contra asset. So it's a balance sheet account. It just has the opposite side for its normal balance, which would be a credit balance. Oh, okay. Well, that makes sense. So we're going to keep track of the additional depreciation that we had for the SPY equipment. And so now we have accumulated depreciation is going to increase by an additional $5,000. So we have one debit for depreciation expense and then a credit for accumulated depreciation. We're in balance, we're happy. So that's depreciation expense. Next we have is insurance. Insurance expired by 2000. So $2,000 worth of our insurance that we paid in advance has expired. Time has been used up, and so $2,000 worth of time has been used up. So we look over here, we have this prepaid insurance account, which is an asset. It's a future economic benefit. And so it's insurance we paid in advance. And now we're using up that time for that insurance. So some time has passed, and so we need to record that usage of that insurance. So that insurance amount is no longer prepaid by $12,000. It's actually going to be prepaid by only $10,000 because we used up $2,000 worth. So we'll have to record a credit to show the usage. So let's go over there and do transaction B for $2,000 used up. Well, that use now, we have a asset account being decreased. Okay, that's fine. And we need to now record a debit. Okay, here we go. Here's insurance expense. We didn't have it here. If we had insurance expense, we'll record it in here, but there was only two expenses, rent and wages. So we'll have to drop down here and make our new account, add a new account for insurance expense for $2,000. Perfect. We're in balance, a debit and a credit. Supplies on hand. So our supplies left, our supplies, they went and counted how many dollars worth of supplies accounts they have, and it was $4,000 that was left. So we can go and look at our asset of supplies, and it actually says here on the trial balance $6,000. Well, no, we counted only $4,000 left. So we must have used $2,000 worth of supplies. So we need to reflect that. So we'll have to decrease our supplies by $2,000. So that way at the end, we'll have $4,000. So let's go ahead and do that right here just so we can see. So we have a debit for $6,000. And I just said we need to have $4,000 left. So I did a credit to decrease that $6,000, right? So $6,000 minus 2 gives me a remaining debit balance of $4,000. Hey, that's correct because C told me supplies on hand is $4,000, the ending balance. So that's cool. We'll leave that there just so you can see that that's what I had to do. Just a little easy math, not too bad. So that we used up $2,000 worth of supplies. So now we get to record a debit to supplies expense. Well, it's not here, so we'll have to drop down and make a new box for it. And so we have C with a debit of $2,000 worth of supplies. Cool. So don't get tricked up because a lot of students do like to put in that $4,000 instead, but it says on hand. If it said it used up $2,000, then we would have done it that way. But it said on hand, that means it's ending balance. So that's what that is. All right, next we have is wages owed but not paid for. So in this case, our employees did some work for us during this current year. Year ended March 31st. So up to March 31st, the employees did work for us, and so we have wages that we owe of $9,000. We did not pay them yet. We didn't do cash. So if we had paid cash, then it would have been recorded within wages expense. But it says it's owed. So that means we didn't pay it yet. So we owe it to them. So we're going to have a liability. We're going to have wages payable as our liability. So we need to record that. And then in April of the new year, we're probably going to pay them. And so we'll take it out of that liability and then record that we paid with cash. So cash will go down and then we'll decrease that liability. So, but we're not going to worry about that right now. We're in March and we need to record our actual expenses, and we had employees actually working for us. And so we need to record that actual amount of additional amount of $9,000. So we're going to do D, $9,000 for wages expense, an additional amount. So we see that we had a wages expense here already, so we could do that. And now we need to record that we owe. We didn't have cash. come out. And I said we have one balance sheet usually and one income statement account in adjusting entries. We already did our income statement account, so we need a balance sheet one. So what we're going to reflect that we owe, well, we'll do wages payable. And so we'll go ahead and do a credit for our payable. All right. And so we want to make sure we actually balance so we didn't get anything mixed up. And I can see that we do because it's only 4 transactions. But let's just go ahead and quickly, you can, add it up any way you would like. But I'm just going to do that to add it. All right, so there's our sum. And it should be the same amount here. Yay. So we have 18,000 on the debit for all our adjustments. And then 18,000 here for our credits of our 4 ones that we did for adjusting entries. And that's it for this part of the video. The next part we'll do our adjusted trial balance, income statement, and balance sheet columns.